feed here, YouTube. It's just queuing up right now. So I was a little late on this one here. I know I missed something. I was just trying to think, oh, what did I miss? What did I miss, you know? Maybe old age is starting to creep in here. Just give me a couple seconds. We're just getting set up here with the live streaming, and it looks like
Feed
all
here,
systems are
YouTube.
go. It's just cute. Okay, looking good. Looking real fine. Real fine. All right, now I just got to move this over here. I've got two screens, as you can tell. I probably should have three actually, but I've got just got the two. Two's fine. Okay, I'm gonna get this guy over there. All right, there we go. All right, and now we just got to record the session, and then we're all set to go. Okay, three, two, one. All right, good evening, everybody, and welcome to DayTradeSPY.com's weekly fireside chat introduction to options trading preview of the coming week. My name is Hugh. Talk about that in a little bit here. I'm seeing a lot of people still coming online here, is what I'm looking at. So bear with me while I just hold on until these guys are. Come on, guys. A lot of seats in the front here. We still got lots of room in the front. Come on in here, folks. Okay, come on in. Dave, Derek, Don. You guys are all here. Greg, James, John, Johnny, Ken, Mark, Michael, Mike, Pete, Priscilla again, Reg. Okay, we got them all. Well, there's a whole bunch more. I just named a few off this, just off the list here. There's a whole whack of people here. All right, guys, gals, it is February the 22nd. February the 22nd. Can you believe it? We are heading into the last part of February. Does that mean that winter is dying down? Oh, I sure hope so. All right, just for those of you who know, in the training room, whatnot, I will be heading off to Florida on Tuesday. Not missing a beat though. I'm leaving in the afternoon. God willing, we able, and the weather cooperating. Got an afternoon flight, and so going to be on the training room all week. No problems at all. But we're going to be doing it from Orlando, from the beautiful big city of Orlando. Anyway, that's coming up. Of course, it doesn't impact you in any way possible. But we're going to be there probably a couple of weeks. We'll see, 1 or 2 weeks. Not really sure. Haven't decided yet. All right, so folks, there's a questions box. You'll find a little icon in your questions box, the questions box icon on your Zoom dashboard. Click on that. I'm the only one that sees that. You can see it right there, right? And yeah, and I hope to get all your answers, all your questions answered here. I have to put up this disclaimer here. By attending this webinar, you fully understand and accept the financial risks involved in trading securities. The risk of loss can be substantial. You should carefully consider whether such trading is suitable for you in light of your personal investment objectives and financial resources. By accessing this webinar, you understand you're not receiving any advice as to when to buy or sell, but are simply receiving information for educational purposes only. Any decisions concerning a trade are solely your own to meet your personal objectives and risk tolerances. You're alone responsible for all your own trading, and past performance does not guarantee future results. Okay, with that all said, good trading, everybody, right? That's what we always say here. Folks, going to meet your hosts. My name is Hugh. And of course, John, now John's got the day off. We always give him Sunday night off. All right. He gives me Wednesday nights off, and I have Wednesday nights off. He has Sunday nights off. All right, that's what I'm trying to say here. Anyway, that's what we do here. So, folks, anybody who is new on, let me know in the questions box if you are new. If you are new, because then I'll go over what options are and whatnot later on. Okay. But I sense that most of you are probably familiar with what we do. Most of the real good stuff that I teach, I learned that from the trenches, deep down in the trenches. That's the hardcore stuff, all right? That's really where you learn all the real stuff, okay? Of course, I got a lot of theory and whatnot from different things, sources, but the really good stuff I learned from the trenches, and that's what I teach. And I've been doing that now for a long time, since 2010. John used to be a litigation lawyer, all right, a very successful one at that in the oil and gas field, literally out in the fields. And he gave that up so he could trade. He just likes to trade and teach people how to trade, which says a lot about trading, and it says a lot about John. All right, it says a lot about both John and trading. It says that hey, you know what? He likes to help people. He's a lot like me. Neither one of us has to do this. We like to do this because we enjoy watching you succeed. I know it sounds crazy, A lot of people don't even believe it. They say, "You, I know what you're doing. You're making your money teaching. You're not actually trading." Well, that's not true. I do make my money trading, and I'd be lying if I said I don't make some money trading or teaching, training. Yes, of course. Why would we do this for free, right? It just that just doesn't make sense. Nor would you want us to do that, right? So that's what we do. We enjoy watching you succeed, but yes, we make our money on the stock market every day. So the way we figure, if we're going to be trading, right, our own accounts live, well, why not just open it up and let you watch? And we can teach you a few things, and that's kind of the reason we do it. Anyway, John's philosophy very simple: take what the market will give you. I follow on the same path on that one here. And John and I teamed up. I think it's quite some time ago. Got to be a year now. I'm sure it's a year. Maybe actually it's more than a year, I think. And great team, great teamwork. We have a lot of fun. We make money, and we enjoy watching you make money. So, all right. So let's move along here, folks. Announcement here: Spy in the Market. This is a newsletter goes out every week, every Thursday. You'll want to get in on this one here. This week, the title is going to be Using Fundamental Analysis in Trading Options. Using Fundamental Analysis in Trading Options. It's a brief 3-minute read, all right? It's not one of those long, drawn out, newsletters, boring. It's not boring. It's only 750 words. So it gives you, you can read it in about 2, 3 minutes, all right? And it's actually pretty good. So this week it's going to be all about fundamental analysis in trading options. To get this newsletter, just simply go to our website, DayTradeSPY.com, and when the pop-up comes up, leave us your email address, and then you will be on the list to get this every Thursday. Okay. Now, if you don't want to subscribe, you can still get the newsletter. Simply go to the website, DayTradeSPY.com, and up at the top left corner, I think it says newsletter or e-newsletter or something, or Spy on the Market. That's the name of the newsletter, Spy on the Market. Click on that, and the little pop down will come. You can actually look at all the archived newsletters going way back. Over 2 years worth of 2 years worth of archived newsletters going back. All right. All right. So I want to take a quick survey here, folks. Rate your options experience just to get an idea of who I'm talking to here. I want to see how many people are new, how many people have been around with us for a while, whatever. It's not a test. It's not a nothing you're going to get marked on or anything. Oh, too far. I just kind of get an idea as to what your experience rating is here. Are you a beginner? If you know nothing or very little, put an A. If you know what calls and puts are, but not a whole lot more. Punch up a B. And if you're very proficient, you understand theta, delta, volatility, you're kind of really with it, then put up a D. Excuse me. And if so, you're somewhere in the middle, just put up a C, just to give me an idea of the people that I have up on the board here. Okay, so I want to. Okay. All right. A lot of C's, D's, few B's. No A's. Okay. All right. B's. Okay. Good to have you all here. I see some new names. Kurt, Derek, Ross. Okay. Good to get to see some names. All right. Sounds good. Thank you very much for that. Okay. Let's take a look at what happened here last week, ladies and gentlemen, 'cause I know that's why you want to go, you want to see what happened last week and where the markets are going, and a few other little tidbits that we'll be talking about here tonight. I don't want to keep you much more than an hour. Okay, I say that every week, and before I know it, we're into it for an hour and 10, hour and 20 minutes. I don't really want to do that tonight. I want to spare you the anguish, um, and move on with it. So. This is the chart that looks we had last week and even a few days, couple days after last week, going back to Thursday. I wanted to get that that big drop off that 690, 596 all the way down here. I want to get that in there because a lot of what happened on the week really kind of goes back to that too. Monday, of course, markets were closed. President's Day on Tuesday. SPY struggled, looking for direction coming off that long weekend. Also, artificial intelligence concerns of late. That's what happened. There's been some concern about artificial intelligence. That's what knocked the market right down on its feet. We did get a little recovery here on Monday. Going back to Monday here, actually we dropped down. Actually from Thursday, bounced around Friday, could not break up through 686. Came down even lower, just around 677. But we did come back up here, climbed up, closed up at 682.78 on Tuesday. On Wednesday, the tech stocks rose for a second straight day, trying to recover some of this loss. The idea here was that if we can break through this resistance around 689, we should see a fairly quick move back to the upside. Well, we could not secure that support over there at 686, 689 rather. We popped up into it, tested that resistance several times, but it did come back down. Retreated on a classic double top pattern as well. We had the Fed member minutes, and it revealed little appetite for rate cuts. So that just we didn't have that impetus to push it up. No catalyst there. Thursday, Iranian tensions. We're gonna go bomber, and we're gonna go bomber. And well, all right. So we loaded up our arsenal, ready to hit Iran, which of course snapped the winning streak. Oil prices hit a 6-month high. All right. And that, of course, is threatening inflation, right? If oil prices are going to go up, and actually they went quite a bit, what about 60, $70 a barrel or something? Which is quite a bit. So that means that, right, energy prices are high, that's inflationary, interest rates are going to go up to combat inflation. And so that's why SPY dropped on Thursday, finished at 684.52. And then, of course, on Friday, we bounced around a little bit on economic news. PCE numbers came out, bounced around there, ran up, but it was the Supreme Court decision to strike down the Trump tariffs that pushed markets back up. Uh, so what happened? From a seasonal standpoint, let's take a look here. The blue line is the current SPY price. The red line is an average of the last 5 years daily close. And when I look back here, I can see that. Let me just take a look here. I want to bring this up a little bit. There we go. Believe it or not, SPY actually dropped about 10 points over the last week, historically speaking. But if you go back to history, well, coming up in the next week, we gained about 2 points. So we'll see if that trend continues. Of course, it doesn't necessarily mean it's going to continue on, but it's just kind of nice to see where the pressure is, right? Where that pressure is. What happened last week, though? The big news. The U.S. Supreme Court ruled against global tariffs. Well, it didn't really stop Trump or the administration. He responded with a 10% tariff on everything, all trading partners under Section 122 of the Trade Act of 1974. Basically, Trump's MO is, well, more than one way to skin a cat. I'm going to get my tariffs one way or another. And so he ran this other. I guess he must have had this in his back pocket all along. I don't know. And there's a lot of exemptions. For example, the U.S., Canada, Mexico Act, the Free Trade Act there. Those items are exempt. But essentially everything he slapped all trading partners 10% across the board. Why? Because he can. Now that has since changed. That was on Friday. He now has hiked it to 15% global tariffs to replace many of the duties ruled illegal by the Supreme Court. Uh, I don't know what's going to happen with that. Is that going to go back to court? I don't know. We're going to wait and see what happens. But he said tariffs, the most beautiful word in the English language, in the dictionary. He likes tariffs. But there's a little problem with tariffs, okay? And if they're illegal, guess what? I think you got to give the money back. Anyway, a lot of uncertainty may have been lifted, but there's no mechanism or proposals on how to refund those tariff revenues. Estimated amount collected from tariffs, something like $175 billion. That's a lot of money, roughly 0.6% of the $30 trillion U.S. economy, and certainly nothing, not even close to what the U.S. debt has been jacked up by. So um, it's a problem. That is a problem. So we'll see what happens. All right, we did have a nice little, a little tick higher on the S&P. 1.1%. And let me get a little thing in here. How do we miss this percentage? There we go. Okay, let's get this back up. There we go. 1.1%. Ran up yesterday, so last week rather, and year to date we're up 0.9% on the S&P 500. I'm sure we're going to move that up a little bit higher before the end of the year. Nasdaq had quite a jump, or rather a drop earlier, but that's 1.5% increase last week. Of course, the Nasdaq that's where the heavyweights are, right? All the heavy tech stocks. And whenever there is some hesitation or any movement at all, you're going to see it on the Magnificent Seven stocks, for example, the weighted stocks. They are now still trailing along 1.5% year to date. Dow Jones, however, the just kind of chugging along. That rose 0.3% now, enjoying 3.3% year to date. Okay. I think that was a laggard a couple weeks ago. All right, what's coming up on this week? It's a no news day on Monday. Tuesday, we've got the Conference Board Consumer Confidence Report, Richmond Manufacturing Index, and President Trump is scheduled to speak on Tuesday as well. I want to find out what time, and let me just check on that here so I can give you a report on that on Tuesday. Let me see. Tuesday, Trump speaks. Trump speaks. Bear with me while I find that out. I thought I had that here somewhere. Okay, it looks like he's scheduled at 9 p.m. So that should not affect the markets when we're in on it. He's going to be giving a State of the Union address in Washington. Okay, State of the Union address in Washington, 9 p.m. Tuesday. Mark your calendars. You'll want to watch that. No economic news scheduled for Wednesday. However, Nvidia earnings are scheduled to come out after the bell on Wednesday. That will have an effect on the stock market. All eyes are going to be on Nvidia. Okay, and of course the outlook, future outlook for Nvidia earnings. Okay. All right, Thursday unemployment claims, and on Friday PPI report and Chicago Purchasing Managers Index. These are the guys that are going to be reporting on Friday, and that puts us into volatility low on Monday. And I've got to set it high for the rest of the week. Also, you want to watch any scheduled times whenever Trump speaks. Volatility could be ramped up on those times as well, right? Whenever he speaks, markets can be going up higher, okay? And I shouldn't say the markets, but volatility is increased. So whenever there's higher volatility, you get higher prices on options, right? Higher bid-ask spreads. Although I haven't seen it in the last few days, a couple weeks ago, we saw some massive spreads, 10, 15 cents, 20 cents on the especially on the put side when the markets were just kind of going a little crazy. You don't want to get in any trades whenever you see that sort of thing happening, okay? Everybody's trying to just kind of protect themselves. So you get wide bid-ask spreads, a lot of volatility, not a good place to be. Okay, you want to stay out. You want stability in the markets. Not that there's any real stability, if you know what I'm saying, but as best as possible, you want some stability. Okay. All right, let's move along here. Looks like we are kind of moving along, aren't we? All right. Folks, we have a lot of opportunities every day in the market. And this is the nice thing about the stock market. If you miss an opportunity, don't worry about it. There's another one right around the corner. Uh, I gotta, I gotta tell you though, sometimes it's very painful. Sometimes it's very painful. Let's go back to the screen a little bit here. The other day, when was it? Friday? I can't remember now. Thursday or Friday? I guess it was Friday. It was Thursday. I can't remember. I remember it was the end of the trading room. Okay. So I'm just taking a drink here, wetting my throat a little bit. Well, I wasn't going to wrap up my trading. I felt really good. I was at one with the market. I felt really positive, and you get in these moods, right? So I'm going to keep trading. I'm not going to trade a lot. I'm just going to throw some money at zero date expiration contracts. Now, we generally do not do those in the trading room because we try to exercise more safety than that excitement, that adrenaline rush. We may at some point bring in some zero date expiration options to trade. Kind of got to pass that by the board, the board of directors, the eagle, the eagle people. They They have to approve all these things that we do, right? They have to approve everything that we do. So, but I like zero date expirations in some capacity. For those of you who are experienced, right? Are you experienced? Only those experienced should do zero date expiration. Because if you're not, all right, it's only a matter of time before you blow up your account. And I don't say that lightly. That's actually very true. So do not attempt those unless you fully understand the risks. However, again, on the zero-day expirations, I saw a beautiful chart pattern setting up. Maybe it was Thursday. I can't remember. It was probably Thursday. So I got into those because I saw this thing dropping off resistance, and so we had a nice run up. Oh, well, I'm just gonna go back. Let me go back here for a second. I'm gonna show you. I'm pretty sure I can go back to the chart and just show you. It would have been. It was this day here, Thursday. Now I don't have. No, I don't have the actual thinkorswim charts up, and I'm not going to bring it up now. But the market ran up, came down, ran back up, and as it was coming down here, as you can see, it says it's coming down here. I actually got into a trade right here Thursday. I'm going to see if I can just kind of show you here. I don't know if this is going to work or not. Stamp spotlight, not a spotlight. I don't know. Drawing. Is there a drawing here? Color. Undo, undo, redo. Oh, I don't know what the heck is this. Options. I'm going to just forget about that. As the market was coming down, I think you can see this cursor. Here you go, right here, Thursday. I jumped into some puts, and I had a pretty good profit. I think I had about 20, maybe 30 cents profit or something in those trades. And then I saw it really tanking, and I tried to change my sell order. I couldn't get it to it fast enough. It took me out real fast, and okay. I made some pretty good money. However, I left about $2 on the table on those options, those put options that went down there. And I thought, I really felt confident that was going to happen, and but I had my sell order. I got taken out. I didn't want to jump back in again. I thought, you know what? I'm just going to be happy because one thing you don't want to do is jump into a trade when you're emotionally charged, either good or bad. Because to me, anyway, I found that that usually results in a bad trade. But I was pretty happy. But then I went back. I saw, oh my gosh, I left about $2 or more on the table. If I just waited a couple of minutes, that's all it took. Anyway, I'm not sure how I got off on that tangent, but I did. And let's get back to this screen here. So my point here is that there are opportunities all the time on the stock market. If you want to see where they are, just go back to any daily chart. You'll see, options. You pull up an options chart, you'll see the history of an option. You'll see the wild swings all day long. There's all day long there are opportunities. So don't worry about if you miss them. But we show you how to spot them and how to trade them. And that's what we do. That's our job. All right, that's what we do. All right. So one of the things we're doing is this thing we're calling a 2026 goal. You can jump into this plan anytime. What we're doing is we are tracking all the trades that we do, that we narrate, I should say, in the trading room. All right. Now, any trades that we do not narrate, they are not part of this program. But anything that we narrate, we put it on the spreadsheet and we track them. And we track them as if we are only buying 5 contracts per trade. Now, the reality is, I don't know what John trades, but I can tell you I generally trade more than 5 contracts, okay? But it's assuming you only trade 5 contracts, that's what we're putting in here. All the trading room trades are included. This is not a separate, gold trade or something, but it's all just part of the whole package, right? So this is what the spreadsheet looks like that we did last week here. We are currently year to date up $7,785, as you can see down here. All right, and this is what we're doing here. And there's the daily totals. Yes, we have losses. All right. If anybody ever tells you they never lose, they are lying to you. We got a $500 loss here. Not we, I. That was my trade there, and I had a $350 loss there the other day on the 17th, which was what, Tuesday? I think it was a Tuesday, right? Tuesday. So yeah, we have losses. We have losses. I'm not going to kid you. But overall, we are up. Currently 77.85. I'm not really sure. I haven't done the math on it yet, but I think we're kind of pushing towards, towards 45, $50,000 a year profit if we continue along this trajectory. Okay, so we're plugging along right there, and that's if you're only trading $5,000. Sorry, five contracts. So to be in part of this, there's not an alert that goes out to this. Okay, so I know that's a question that came up. These are the trades that we actually execute, narrated in the trading room. The pick of the day is not included in this. All right, that's a separate subscription. Neither is the signal. And if I am talking and John, excuse me, say John does another trade on the side that he was not able to actually discuss, that is not included. Only the trades that we narrate are included in this list. So today we did 168 trades. We did have 20 losers, 148 winners. Our average investment is 2772. And again, the profit to date, 7,785. I think that's a pretty good, I think that's pretty good. I don't know, whatever you think. All right, so join us in the trading room if you're not part of that, because that's where we do it. I'll tell you in a little bit here, a few minutes as to how to get into that. All right, let's see what we're doing here. It's our 2 minute tutorial, ladies and gentlemen. Our 2 minute tutorial might take a little longer than 2 minutes. I got a feeling it might even wrap it up early tonight. I'm not really sure. Well, it depends on the questions, right? So let's get into that. I'm just looking here. I'm not very photogenic, am I? I mean, I get this really kind of a goofy look about me. I never like the way I look in videos or photos. Um, I don't think, but they say nobody likes the way they look, but I really don't like the way I look. So maybe if you want, if there's enough interest, punch it up in the questions box and just say yeah, just go audio. You don't need the video. I won't. My feelings won't be hurt. Okay. Yes. Well, I was pretty handsome in my younger day. Would you believe that? Ladies, really, I was. I was. Anyway, folks, 2 minute tutorial: the benefits of paper trading. Now, I know you know it all, right? You know it all. Why would I talk about this? I'll tell you why I talk about it. I got an email from somebody. Let me see if she is on, because I don't want to center her out. Okay, okay, she is not on. Good, I could talk about her. Okay, this wonderful lady, very, very complimentary. We exchanged some emails back and forth. Very, very good. But essentially, she lost a few bucks this last month. She was in the trading room, and she lost a few dollars, and she's concerned. And so I invited her to send me her log. I assume you guys are logging your trades, right? All right, paper trade or real, otherwise. I have yet to receive it. But in discussion, it turned out that so she made some mistakes, no question about it. And I thought the biggest mistake she did was she didn't start the program paper trading. Now, if you are new to options, new to our strategy, new to us, new to Day Trade Spy, right? You really got to start with just paper trades. I mean, I still do a lot of paper trades too. Not all of my trades are real. Most of them are. But if I'm looking for something, I'm looking to maybe look at a strategy or something, I will paper trade. Here's the benefits. Obviously, you're preserving your capital, but this is the best thing here, okay? Excuse me. Practice your strategies. Experiment with different approaches risk-free. See how your entries, exits, position sizes, all that stuff works out with various models. Get comfortable with the platform, then analyze your results. Learn from your trades. So I kind of want to go back to this for a second. You cannot lose real money if you're paper trading. So the first thing you want to do is obviously get comfortable with your platform, and I'm assuming that probably most of you are already, because you're probably coming from some sort of trading background anyway. So you're probably okay with how to buy and sell. But the thing is, look at our models, our strategies. And in, for example, in the trading room, all right, you're going to pick up the nuances that we discuss. We talk about things like volatility. We talk about theta loss. We talk about setups. We talk about chart patterns. We talk about support resistance. We talk about Fibonacci. John likes to talk about pitchfork and other things. He looks at longer term trends. I look at trends. I bring in the yellow brick road. There's a few things here. We try not to uh, overwhelm you with things, and I don't like to get into indicators that don't mean anything to me. Now, I have used a lot of indicators in the past, and I believe there's a question on the board already, and I'm going to get to this question because it's kind of a nice time to get to it. Something about, was it, where was it here? One of the indicators here. Oh my gosh. Did I lose it already? Ha, ha, ha. Was it, oh my gosh, where did it go? VWAP. I got a question here. How much significance do you place on VWAP when determining direction? I don't watch the VWAP. I have looked at that in the past. Quite frankly, I kind of forgot what it's all about. But there are a lot of indicators I used to experiment with in the past. There was a time I had, so many indicators on my charts, I could hardly even see the candlesticks. Okay. They were just overlapped on top of each other. And I actually had a client many years ago, Mike, this guy from New Jersey. Super nice guy, super great guy, good trader, very accomplished in other areas. Helicopter pilot, part-time actor. And actually, he was even one of the episodes of The Sopranos, if you can believe it. But and he told me which one I saw. There he was. There's his name. Yep. Anyway, he went through my course and he was doing very well. Then off he goes, and then I don't know. Sometime later, I don't know if it was weeks or months, but I got an email from him that said, Hugh, your strategy is not working anymore. Your strategy is no longer valid. I said, yes, it is. Why? What are you doing? He said, well, I don't know. I keep losing money. We went back and forth. And finally, I said to him, Mike, I want you to tell me every single thing you have on your screen. Everything. So he starts naming off all these different indicators that he had, like RSI and different things, and Darvis boxes. So whoa, back up, back up, back up. We don't talk about RSI. We don't talk about Darvis box or any of these other indicators you got up there. Where'd you get those? Well, my friend this told me about that. My other friend told me about this other one. But oh, I said, Mike, okay. It doesn't work that way. I think I know what's going on. You tell me if this is what's going on, Mike. I said to him, you're waiting for all these indicators to line up, right? And to fill the goal that you're looking for. You're waiting for all these indicators to do what they're supposed to do. And then you get in, right? So yep. And now do you find you're getting in at the end of the trend? He said, that's exactly what's going on. I said, right, right. They're confusing, they're distracting. A lot of them give you the same information. They give you information that's not really relevant to what we do. Excuse me. Maybe they are relevant in some other fashion, maybe longer term trends. For example, Darvis boxes. Darvis boxes, history behind this guy, Nicholas Darvis. Many years ago, decades ago. I don't know when it was, but a long time ago. Even wrote a book on it. He was a Hungarian dancer living in New York. He used to go on this dance troupe, and they had actually a show in Toronto, Canada, and they went up there and they danced, and the organizer of the show said, "I got bad news. I didn't get the ticket sales I needed. I can't pay you. However, I own some stocks. I'm going to sign over these stocks. I don't know what they're worth. I have no idea, but you can have these stocks." So Nicholas Darvis took the stocks. Fine, there's my pay. He took them back and he realized, oh my gosh, these things are actually worth something. So he was able to cash them in and made some pretty good money on them. But this really intrigued him, and he started buying stocks. So he would look at certain stocks. Well, you said when he was at home, and he would look at certain things. I'm not sure what those criteria were. I think opening price, high, low, closing price from the day before, and then he would study this, and then he would excuse me, he would place trades based on this criteria. He'd find, I guess, mentally, or we would write it down, these support resistance levels or something. Obviously, we didn't have the charting software or anything back in those days. No computers, nothing like that. But what happened was they would go in all these different tours, and he would have his broker telex him or however they communicated the various stocks that he was looking at, and just give me these four or five numbers. Yesterday's close, today's high, low, and close, whatever it was. And then he would place trades. He would say, okay, if the stock hits this number, buy so many shares. If it hits this number, sell so many shares. And he actually did very, very, very well with this. Then when he came back to New York, he stopped in at one of these brokerage houses where you could go in off the street, open an account, and you're watching all this trading going up on the board. And all these guys are yelling, oh, sell, sell, buy, oh, this, and they're going crazy. A lot of activity going on here, right? So he'd go in there and he partake in this thing, and then he found that he started losing money. He says, "Oh my gosh, this isn't working out." So he stopped going and just went back to his old system. He found that if he watches it, live as it happens in real time, he ends up losing money. But if he just follows this other system that he had set up, he was actually making some very good money. So he went back to that. Anyway, he wrote a book about it. Okay, well, that kind of trading, Darvis boxes, does not apply to day trading options on SPY. And this is what I told Mike as I circle back. I said, get all this other stuff off. And I don't talk about RSI and all these other things and VWAP or whatever you want, all these other. Go back to the basics, Mike, that I taught you. There's a reason I only give you a handful of indicators. There's a real reason for that. And he did that, and guess what? He started making money again. That's what I found that works. So, but if you paper trade, you might find something that works better for you than something else. Now, John and I, we come from different backgrounds. We come to the same conclusions. Now, we have a saying that when our indicators unite, our trades ignite. Now, he looks at one set of indicators, and I look at another set of indicators. And what works for me, great. What works for him, great. But let's say he says, you know what, I see this thing popping up through resistance. I think I'm gonna set up for some calls. And I'll say, John, I see the same thing. I also see a setup using my indicators. I think this thing's gonna pop and go up to such and such a limit, order, whatever. I'm getting into calls as well. Guess what? We get into calls, thing pops, goes up, we make money, right? But you can do this with paper trades with no real risk. And you can see that, well, look at this. This little strategy worked. I got to remember this, right? Or I better be careful. When this other thing happens, it's not working. I better be careful. Anyway, these are the reasons to paper trade. And yes, sometimes I still paper trade, not that much, but if I'm testing something or if I'm just not really sure, okay, I'll try a paper trade and see where it goes. The best approach to paper trading, folks, start with a lot of paper trading first. I just threw this number out there, 50. Some people say do 100. Other people say, you're okay with 20 or whatever. Start with that. No real trades, as tempting as it might be. Just do paper trades, especially if you are new. If you are new to options. And here's the thing with options. If you are new to options, you can actually have a great trade one day and then using the same setup, same everything the next day on the same options, do the same thing, and you find that you're losing your shirt. And you're wondering what happened here. How is it that yesterday this was a great trade? I did everything the same. Today it's the thing is going down the tubes. What's going on? What happened? Well, there are things that happened that you might not have been aware of, or the changes in the market. Volatility might have increased. Lost some data loss. Slowly transition to real. I suggest go do 10 paper trades, then one real, right? Get a success there. Then do 8 or 9 paper trades, another real. Go down there, do 5 or 6 paper, then one real. Keep doing it this way for a while until you're totally comfortable with this, and then go a little bit deeper into it, right? And when you feel challenged with real trades, then again, pull back into paper trades. That's what I do too. So I'll go back and I look at my logs and I take a look at my logs and I see, You know what? The last little while, it's been kind of challenging. I don't know what's going on. The market's changing, or I'm not reading something right, or I'm not feeling well, or something's not quite right, right? Then I'll pull back into paper trading. Or if I have a really bad position, a bad trade, I'll pull back into paper trading. See how that goes. There's no shame in that. There are a lot of variables that influence your trades. Markets change, you change. The objective here is to gain confidence in your trades, and that will lead to resilience, right? But you got to be prepared to change the course quickly. When the market changes, you got to change with it. And that's really what it's all about. Okay. All right, that's the best approach I find to paper trading. The name of the game, folks, is to stay in the game until you win the game. Now, I'm going to tell you something here. There are four enemies of traders. Four enemies. Number one, using the wrong strategy. Just like I told you about my buddy Mike in New Jersey, he's trying to apply a different indicator for the strategy that he was using, something that might have worked better for maybe swing trading or position trading or something. It's the wrong strategy. Just like, I mentioned earlier, I jumped into, a zero date expiration trades. Again, that's for more experienced, higher risk, high reward, higher risk trading. And, so I don't advocate that in the trading room necessarily because, a lot of new traders, I don't want to get you on the wrong foot into a high risk thing. But you have to use the indicators that apply to the strategies that you're using, right? That's the enemy. Number one, a lot of people do that. Number two, lack of emotional control. This is the big one. You really gotta get control of your emotions. You should be at a point with your emotions where you can 100% control them. Let's say you are trading, right? And your wife of 30 years walks in and says, "I'm leaving you." You should just be able to walk up there and say, or just look at her and say, "Okay, goodbye, have a good trip," whatever. You know, are you packed? Whatever. You know what I'm saying? I'm obviously being facetious here, but I'm just saying you have to have 100% control of your emotions, of your greed, your ego, your fear, your FOMO, right? Fear of missing out, your YOLO, you only live once. All these are the emotions that play. And that one lady that I just told you about, her email to me saying that, she's this is not for her. She's not, she got into trades and she got out too early or too late, whatever it was. She lost her emotional control. But I kind of know why. That leads us to number three, undercapitalized. I suspect she was undercapitalized. By that I mean you should have enough arsenal, right, in your you know in your box here to take care of the task at hand. You don't want to be in a position where you're trading your rent money or your mortgage money. Okay, not a good idea. Not a good idea. You should always be okay to lose a trade if and when that time comes when you have to take a loss, right? Never trade money you cannot afford to lose. I know it sounds counterintuitive to what we're doing because we're here to make money, not lose money. But the reality is, you should always have. I mean, I like to tell people, you know what? Don't start trading real money unless you have at least $5,000 in your account. Not that you're going to be trading that, you're not. But you want to live to be able to trade the next day. And that's really what this is all about. I prefer 10, 15, $20,000 in the account before at least before I get into real trade, like in a real meaningful way. Trading 5, 10 contracts, you should probably have 10, $20,000 in your account. Okay. Undercapitalization, I think a lot of traders lose because they might have $2,000 in there. They trade the whole $2,000. They lose, the market turns against them and they're out and you never see them again. And number four, a lot of charlatans out there. Now I say this because for years I have been fighting this this trend that seems that everybody and anybody seems to have a program out there, and they're trying to sell you their program, their strategy, their whatever. Now, maybe they had a certain luck with a certain trade, so they think that they're great, and maybe they are. But a lot of people, they say, well, I had a great trade, so I'm going to start teaching this and getting all kinds of people to throw money at me and everything else. The key here is to stay in the game long enough, longevity, right? We've been doing this since 2010 publicly. That's a long time. 16 years, 17 years. We're in our 17th year. Where's it the 16th year? 16th year. Folks, you know what? The key is, can you replicate your trades? Can you replicate your winners? That's the key. And these people that say they never lose or that they give you these great trades. Have you ever been in one of these programs where they say, well, you should have bought here, you should have sold there? And you're looking at it and say, yeah, you're right. I should have bought there. I should have sold there. But if you notice, they go back in time. How did you know that that was the low when you should have bought, what they say, or that was the high when you should have sold? You didn't know that until after the fact, right? It's impossible to know that. Folks, you got to be careful. A lot of charlatans out there. We've been doing this long enough. We're not, we're here. We're here for the long run. We're the real deal. And that's what you got to watch for. Do your homework, right? Do your homework. These are the four enemies I find of traders. And when you can dance around these issues, I think you're ahead of the game. And recognizing the enemy. It's not just the stock market. It's actually the stock market's actually your best friend. The enemy is actually the person in the mirror. Those emotions, those emotions. That's your enemy right there. Using the wrong strategy, like Mike did. Undercapitalized, like my friend did there when she emailed me the other day. And charlatans, well, I don't know who all they are, but I'm sure a lot of people get hit with that. I had somebody email me the other day, said, you know what? I've been with so many different programs. I've got many thousands of dollars invested in so many programs. How do I know yours is the one? And this is what we fight all the time. How do you know ours is the one? Well, I'll tell you how. I'm going to get to it right now, and you're going to see we put our money where our mouth is. We have solid gold, learn and earn actionable plans. They're all exclusive through DayTradeSPY. Now, don't worry if you can't get these QR codes. I'm going to present them all at the end of the session anyway. Give you a good couple of minutes to go and take a picture of them, right? Click on them. Folks, the inner circle, every morning you get a morning market analysis. All right. Follow-up report later in the day. You'll be invited to our Wednesday night interactive meetups. John hosts these. Very, very comprehensive, very thorough, answers your questions. These are recorded for later review. These are concise, informative. All you need in one report with the morning market analysis. Let us do the heavy lifting. Are you kidding me? $5.75 a week. That's less than a cup of coffee and a bagel for a week. All right, for a whole week. You are talking here about what is it, 575? Divide that by five. You're talking about $1.15 a day. I don't even think that buys you a small cup of coffee. $2.99 a year. Everybody has to get in on the inner circle just for this report, because what we do here is we take all the various news feeds and different feeds that we use. We bring in all these different sources. We analyze where we think the market is going to go today. We regurgitate it, spit it all out to you in a nice, concise form. This is the one report you need. Even if you only use it once a week, even once every 2, 3 weeks, well worth the cost. Well worth the cost. Whether you're a new trader or a seasoned pro, get it on the inner circle really for $2.99 a year. That is a no-brainer. So we've had people say to us, you know what, Hugh? I don't really have time to get in and learn all this. Do you just have a program where you just tell us what to trade? The answer is absolutely yes. Now, I like to tell people to learn how to trade because this way they can master their own, their own domain here and whatnot. But if you just, are able to get in on your platform whenever you get the signal, right? This is sent to your cell phone as a text message in the mornings, 3 to 5 times a week, algorithm based. The idea here is to buy it right away and immediately put it for sale for a 5% profit target. If not sold by 4 p.m., sell it at market close. $3.99 a quarter or $14.95 a year. And we also have another one, which is the pick of the day. A little bit different than the signal. Signal can come out at any time in the morning, all right, 3 to 5 times a week, sent to your cell phone, whereas the pick is it's handpicked. John and I get together every morning before the market opens, and we discuss where we see the market going that day. Now, this one is anchored in time to be bought at market open. All right. And this is emailed to you just after 9 o'clock. Look for a 6% gain. Usually happens in a few minutes right after the market opens. If not sold at 4 o'clock, sell it at market close. That said, folks, I can't put this in writing here, but that said, a lot of people can hold this overnight because these picks are designed to be held overnight if need be. But because the people at Eagle want us to set a close price on it, we just say, okay, what, 4 o'clock, if it hasn't sold, sell it at market close. Again, $3.99 a quarter, $14.95 a year. Not going to go wrong with that. The real key though here is the trading room. John and I host this. We are professional. We are this is what we do. It's not like we have another job. John doesn't, practice law during the day and does this, after hours, nothing like that. This is what we do full time. Interactive sessions, learn and earn, fully narrated. This is where we present those strategies in real time, live streaming every morning, 9:20 to 10:30 Eastern Time. These are also recorded for later review. Get this, 24.95 a year or 6.99 a quarter. This is the best value. And you know what? You don't have to know how to trade. If you know what calls and puts are, this is where you need to be. All right, now, this is the thing that differentiates us from everybody else. All right. Not only are we totally upfront with everything we do, we teach you, we teach everything, we answer your questions, we're interactive, we are, at one with you. But if it's not for you, let us know within 30 days. You can get your money back. Full 30-day money back guarantee. All right. Now, I'm going to tell you something. You'll want to get it on this right away because I suspect this 30-day money back guarantee is going to be pulled down to 14 days instead of 30, if it's not already. So you may want to make sure of that, okay? 30 days is a very long time. So, but I know they're talking about bringing this back to a more reasonable 14 days. All right. But if you get the program now, make sure you ask, do I have the 30-day money back guarantee? All right. Make sure you're aware of it. And then if so, you're not going to lose. You're not going to lose. All right, moving along, moving along. Any questions? Let's get some questions. Oh, where there we are. There we go. Okay, let's look at the questions. Okay. All right. Okay. Yeah. So what happened was we had a live session set up. They really needed so many people to make it work, and I think they just fell short of the minimum. So they thought, you know what, we're not going to do it. So they canceled it. All right, because they didn't get the numbers. They needed just a few more. And we talked to us, well, we're that close. We're that close. We can still. No, no, no. We had a cutoff. We promoted it, and we didn't get it. That's the cutoff. We're doing it. So that's the reason why. However, Derek, I will tell you that there is something brewing. So we may have something online. Okay, watch for online. Also, I should tell you, we do have some programs that are online. They're done before, recorded and available online that you may want to consider. Let me just see if I can find those here. Let me take a look. Okay, what is this thing called? Day Trade Spy. And I think if you go up here to the online workshops, click on online workshops up at the top right, you'll see various workshops that we had, scalping strategy, chart patterns, setting up thinkorswim, bread and butter. I'm not sure if the master class is in there or not. Masterclass? No. Subscribe now. Let me see what happens here. Oh, okay. This is actually oh, I guess you can still buy it, really? Okay. Well, I guess you can buy it. You know what? If you can't make it to our wow, okay. Why don't you buy this? Okay, if you're not going to be, obviously going to the live event, I would recommend jumping in and buying the masterclass. It is available. It looks like it's still available online for only 19.95. Seriously, grab this while you can, folks. This is actually a very good deal. And again, if yours is the same as mine, go up to the top where it says Masterclass and subscribe now. Okay, and grab it. Just grab it. Okay. And if you can't get to the trading room is really where you, if you could make it there, that's really where you get a lot of great information. So, all right, let's move along with some more questions. Reggie, good to see you in the trading room, along with so many others. He says, I'm so far pleased. Brett, okay. Okay, Brett's asking here. He's been in the trading room for a couple short weeks. I hear you and John setting up upper and lower price levels for the OMG trade at the beginning of each session. Okay, so the OMG is a strategy. It's short for out of the morning gate. Little play on words these days, all right? Out of the morning gate. And uh, so what we do there, the idea here is this. We establish on the 5-minute chart support and resistance lines. Now, there are different ways to do that. Uh, I like to look at candlesticks where they where the bodies had gone up a couple of times. We only go back maybe half hour, an hour, something like that, a very short period of time. And so I like to look at bodies, but John likes to bring in Fibonacci and different things like that. I also like to bring so if let's say I have a resistance within a few cents of a strike price, I'll bring it up to the strike price because that often lends itself to be a resistance or support level as well. Same with pivot points. If it's very close to a pivot point, I like to snap it up to a pivot point or down to a pivot point. But this is what we discussed. Well, where do we see these support and resistance lines? Right? So we establish those before the market opens. Now, the first 5-minute candle to close outside of those OMG lines, that is the direction we are looking to go. So let's say it's a call option that the market closes outside that 5-minute candle, right? Then you're looking to buy calls. Now, you check into the 1-minute chart. If the pressure is to the upside, you buy right then and there. If the pressure is to the downside, wait until it turns around. Then you want to get in, so you get in for a better price, right? Get into the calls and ride it up, make your profit. We're looking for a 6% gain. Now, statistically, the OMG, along with the pick of the day and the signal, been working extremely well. And the pick of the day, sorry, the not the pick of the day, the OMG has been working very, very well, and uh, and usually pretty quickly too. Okay, usually pretty quickly. So now, once in a while, all right, the market will simply turn against us, even though it might close, but it'll turn against us, and we might say, you know what, we're not going to take this because the reasons that we feel that it could have got in don't necessarily apply anymore. We find that it could turn around. This happened, I think, about 3 or 4 weeks ago, where we actually cut off the trade. We didn't do it, even though it gave us a really good trade. I think it was to the downside, but then the market reversed back up, and we never actually took the trade when we should have, could have. We cut it off, so we're not going to do this one. But then, not shortly thereafter, the market just tanked, and had we done the trade, we could have made out like bandits. You know what? You win some, you lose some, right? Statistically, again, the OMG has been working very, very, very well. So that's kind of the thrust behind the OMG trades. So, all right, hot. Oh, typo on the green slide. Hot appears before how. What green slide here? What are you talking about? What do you mean here? How? I'll be on the green slide. What green slide? Okay. I don't really know if I want to go under here. Uh, let's see. I'm not sure what slide. You know, let me just kind of go back here. Uh, uh, oh, we show you. Okay, thank you for that. Oh my gosh, you know what? I look at this thing, I don't know how many times, and I still miss the odd typo. So thank you very much for that. We show you how to spot them, how to trade them. I'm going to save this. And I'm going to go back. Come on. Oh my gosh, look at that. My mouth is open. It looks like the flies are going to go in there. Just say, all right, here we go. Let's go back. Thank you for that. Okay, let's get back here. Okay, let's go back to where we were. Okay, here we go. We're almost there. We're almost there. Okay. Oh, oh, not yet. Question. There were still the questions. Who wrote that? Mark did that. Okay. Mark, thank you for catching that. All right. Appreciate that. Okay. All right. I'll look you on video. Okay. Susanna, thank you so much for that, Susanna. You're very you're very gracious. You're very gracious. I appreciate that. You know, uh, you know, I sometimes look in the mirror and I say, I don't know if I really like what I see. I think I gotta lose a few pounds and get my face back and I don't know. What happened to youth, I look at some people, they're so, when they're young, they're so, good looking, But I've turned into that guy that I said, I don't want to look like that. You ever look at that? Anyway, okay. Can you show the benefits of paper trading slide again? Okay. Benefits of paper slide. Okay. Benefits of paper trading. Okay. I will do that for you. The benefits of paper trading. Okay, here we go. One more slide. Here we go. There you go, right there. This is recorded, by the way, so if you want to go back and view this after, oh, where did I go? There we are. There we are. Oh my gosh. Hang on. I just keep there it is. There it is. Okay, what do you want to get a screenshot of that here? Who said that? Da, da, da. Mark said that. Okay. Reggie chimed in and says, Inner Circle is a great deal for 2.99. Thank you, Reggie. You know what? It really, truly is. I mean, I cannot think of a better deal with anything than that. Um, okay. Seriously, for what would it worked out to what, $1.15 a day or something? Really? $1.15 a day to get all of that great information, compacted, pressed, summarized, uh, you know, and brought to my inbox, so I don't have to get up 2 hours earlier to do that. I don't, and I might miss something, whereas I got John and you doing this, and I don't have to worry about, you know what? It's a great deal. It's an awesome deal. A word that I use sparingly. All right, let's move along here. Let's move along. Let's go back here. Okay, wow. Okay, now can we move on? Can we move on here? Hang on a second here. Okay, 30 day. Yes, 30-day money back guarantee, folks. 30-day. I don't know whoever it does. Nobody does that. So. Okay, I'm glad I now have to have the time to join the trading room. Finally, have a camper already. Thanks so much. When is Orlando? I don't think Orlando's in the fall, is that? Okay. Okay. Vish is asking here, is there a comprehensive program? Yes, I mentioned that earlier. Go up to the website, daytradespy.com, and go up to the top where it says Master Class. And it appears to me that, where did I go here? I think I had it. I want to just bring it back up here. Day Trade Spy. And I didn't know that was still up there, but it looks like it's still there. Go up to the, if you want, if you want a comprehensive program that includes everything we do here, go up to this thing that says Masterclass. I didn't know they're still offering it for sale. Now, folks, take advantage of it. Seriously, okay, seriously. A couple $1,000, you're gonna get a lesson. You're gonna learn everything we do. All right. Now, it is a few months old. I'm not gonna kid you. Go to subscribe now. And this talks all about it. And these are all recorded. They're going to be recording these recorded sessions here, okay? And just fill this out. Give me your 1,200 bucks or sorry, 1,900 bucks, whatever it is, and jump right into it, okay? You're going to get all of this. This is everything we do right here, okay? Everything we do, okay? So I didn't even know that's up there. So anyway, more questions here. Rich, thank you for that. Paid for the master class, which was fantastic. Covered a lot of information. Okay. It is available for future, but it's 30, 60 days. Okay. So you got to buy it. You got to buy it. I'm not sure how long you have it for, but I think if you email them, you should have it for quite a while. I know they're talking about a lifetime membership. Don't quote me on that, but make sure, push them for, listen, I want a lifetime membership for that. If you give me the lifetime membership, I'll buy it. And I can't speak on their behalf, but they might just, but they just might give it to you for that. So, Oh my gosh, Rich, where's the cat? She's right beside me here. She's been walking around earlier. For those who don't know, I'm babysitting this cat. All right, so I'm gonna tell you something. All right, I'm going to Florida, and I am taking the cat to my daughter's place. I don't know if it's tomorrow or the next day. I think it's tomorrow. So now the cat, and this has got nothing to do with trading, but this cat, she hates going in this travel case, right? She fights it tooth and nail, and it's a real struggle. So I thought I would trick the cat. So I put her favorite treats into this travel bag thingy there and case with the door open. And she's lured into this thing with the treats. But it's the funniest thing today. She looks at it. She looks up at me like, I'm not gonna fall for this trap. I know what you're doing. Now I walked away. I walked away and I came back later, still in the house, and she will not go into this. She recognizes that it's a trap, right? But I actually left. I got in the car and left for a couple hours, and I came back. While I was gone, she went into the travel case, and ate the treats. Door was open. She realized I'm not here to trap her. Smart cat, smart cat. So I dread this exercise tomorrow of having to somehow grab her paws and legs and just kind of push her into this thing and manage to close it before she scratches her way out. But other than that, she's a pretty good cat. So doesn't let me sleep though. She wakes me up every morning at about 7 o'clock. Time for food. I say, no, 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 no. You're going on my schedule, babe. Anyway, cat's right here, Rich. Okay, folks, it's 9:07. You know what time it is? I'll tell you what time it is. It's time for a contest. It's time for our contest. This here, folks, is a random number generator contest. We do this every week. We do this every week. Let me just pull it up here. So what I want you to do here, this is a random number generator that the exclusive DayTradeSPY random number generator. Okay, and what we do here is, let me see, we get you to put in the questions box a number from 1 to 100. Okay, and please do that now. And the person closest to the number that is selected wins the prize. Tonight's prize is Tips, Tricks, and Traps. That is the ebook, Tips, Tricks, and Traps. And the closest to it is going to win, and we are going to send you the ebook. Okay. All right. So here we go. I am going to give you approximately 15 no more seconds to get your numbers in, folks. And then I'm going to bring up this is not the number. This is last week's number. So, okay, this is not the number. Okay. I'm going to hit this one button and then it's going to create a new random number. Okay. So, all right. 5, 4, 3, 2, 1. Okay. I think if I hit this number here, the number is 12. The winning number is 12. All right. 12. Now let me take a look here. Who came closest to 12? Okay, we have Gene at 21. Oh, Rainy. Rainy at 10. Rainy at 10. Okay, so far Rainy's got it at 10. Okay, Fred. Fred came in at 11. Oh my gosh. Okay. Sorry, Rainy. You lost this week. Close. All right. Fred's got it. Fred K. Fred K's got it at 11. Congratulations, Fred. You win the ebook, Tips, Tricks, and Traps. I will have that sent to you shortly after. Get rid of this here. Shortly after the trading session ends. All right, folks. I'm going to leave this up here for a good couple of minutes. If you want to grab those QR codes, go for it. And we'll see you the next time. Been a real pleasure.
Just on the price. I can tell you what